L&T Technologies, they've delivered their quarterly numbers as well last evening. Well, the street definitely doesn't seem very excited or enthused by their performance in the quarter gone by. The stock right now down 4%. Let's touch base with Mr. Keshab Panda. He's the CEO and MD of L&T Technology Services. Mr. Panda, thank you so much for taking time out. Revenues were down close to 13% sequentially if we look at constant currency terms. EBIT margins came in at 12.1%. They're also under pressure. There's clearly been a severe impact because of COVID. Which verticals were worst hit, if you could shed some light?
Revenue margin is, world is going through, we are all going through difficulty. 13.6 million people are impacted and 600,000 people are dead. And we are always look at this way. We are talking about engineering and technology where the first thing people look at is how this pre-COVID and post-COVID, how things are going to change. And customers taken a pause. They looked at it and saying that how do we do differently? What we were selling before and what we are going to sell post-COVID. So last few months, 3 to 4 months, where there was a slowdown and there was a chaos in the market. Now things have stabilized now. I think we have given a guidance earlier that we are going to go down in top line. That's what happened. And in terms of bottom line, as you know, it's all linked top line to bottom line. But we believe Q1 was a challenging quarter as expected. Revenue to 1,295 crores, down 4% year on year. That's what we did. But the one positive thing I would tell you about the two of our segment, we are multi-vertical segment, two of our segment did.
You're also stating that the worst is behind. If I read from the press release, you're saying that we expect both revenue and operating margin to show sequential improvement over the remaining quarters of this fiscal. Which verticals and which geographies do you see contributing to your improvement?
Yeah, all these two segments did well. Medical and telecom high tech will continue to grow. We see Q2 onwards, all the segment will grow in Q2 onwards. So only point we need to see that, transportation is a very complicated segment. I think automotive is opening up. We have few wins, we are on to electric vehicle and a lot of software areas. We own few deals there. But what happens is aerospace is still going down. We are getting more into defense area. So balancing auto and aero for the transportation growth, we are still watching it. And I'm sure, but it's not going to be degrowth there. Percentage growth is what we need to see. Or then going to the plant engineering, which again is degrowth. So plant engineering, what's going to happen again is, the FMCG segment is doing well. Chemical segment is doing well for us. Oil price going down to where it is today had some impact on the capex investment by the customer. But I think we'll not have degrowth as we see now. We'll not have degrowth moving forward. The percentage growth depends on all the points I talked about.
During the previous quarter, you had won 9 multi-million-dollar deals across major industry segments. What led to this strong deal win, and how is the pipeline looking like going forward?
Deal pipeline, as I said, is much better than what was before. And, Q4 was a time where everybody switched off. Customers not go to office. Part of Q1, they did the same thing. Now, pipeline is increased. What we had, if I see pre-COVID, we have come to the level of pipeline now at the same level almost. But what's happening is the number of deals we own. We did a March-April time frame we sat together. When you say technology and engineering, how is the customer buying behavior is going to be after post-COVID? What they are going to buy, what that's not going to be priority for them. And I did talk to all my top 80 customers and understand about what if they would be needing it, what challenges they go through, how we can help them. So based on that, we have submitted proactive proposal. We said this part of your product, I can take it, use new technology, which you are going to be much more competitive in the market than what you are doing today. In this difficult time, I can come with you and work with you. So I think that's something which worked out well. And the proposals, you see, in engineering, never there is a RFP comes.
Now, can you also give us some details about your acquisition of 100% stake in Orchestra Technology? How the deal is likely to help in next generation 5G and IoT networks, and what is the contribution do you see in terms of revenue as well once the deal is done?
What we did last year, we did announce we acquired companies in semiconductor segment, end-to-end chip design, which this has given us a lot of mileage on this in terms of we are not considered as a cost factor. Customer comes to us. They come to us because they are looking at it, what value we can create. There are not many companies in semiconductor segment doing design for multiple applications, whether you are automotive application or aerospace application, or you talk about the oil and gas segment. There are not many companies. So that we achieved. Next is what is missing in telecom high tech, the 5G application in devices, in networks. So this company has a lot of patented ideas, platform they have, and they work on the network engineering. So both together, we believe that is a good match for us, what we are looking for it, and our technology where you want to go next 3 years, this is going to help us in a big way.